Compass Mining is your trusted partner in Bitcoin mining. Whether you're investing in one machine or thousands, our customizable solutions are tailored to meet your needs. We are your experts in Bitcoin mining, offering a platform where individuals and businesses can purchase hardware, host machines, and access a range of ancillary Bitcoin mining services. We also specialize in large-scale site development and data center operations. Discover more at compassmining.io and see how we can power your success today. Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. Another day of volatility in the markets for the Bitcoin mining stocks. We're going to be talking about that in today's presentation, along with some interesting graphics or diagrams we've found in relation to the valuation of these companies based on watts. In addition to that, we've got a big press release out from CleanSpark with a strategy shift and some news from Soluna Holdings along with Bitdeer Technologies Group that we wanted to talk about in the video. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comments section below what you thought of the news today from CleanSpark, Soluna, and Bitdeer, your outlook on the mining sector as a whole, and your thoughts moving into Q2 2025. Now, with that being said, let's get into today's video. All right, Anthony, day two of the week here, Tuesday morning. Bitcoin holding up relatively well. We saw a high of around 86,000 and some change earlier in trading, now in the $84,000 and change range. However, the Bitcoin miners, with the exception of Soluna Holdings, have taken a nosedive here, considerably outpacing the decline we've seen in Bitcoin today.
You're quite right. Bitcoin's, moving less than 1 to 1.5%, and the Bitcoin miners decided to, move down, an average of probably about 6% if you look at the current table. Again, it just shows you the volatility we have in the space. In terms of volumes, the volumes also, quite high considering, the market's not been open that many hours, but when you've got, 21 million shares in Marathon, 16 million in Riot, CleanSpark 20 million, TeraWulf 20 million, there's a lot of shares being traded today, some of them quite close to their 3-month average as well. So a lot of trading going on, a lot of share prices hit, and noticeably some of the big names at the bottom of that list there. You've got Bitdeer, TeraWulf, CleanSpark, Cypher, HUT, IREN, all sort of down over 7%, and Bitdeer at the moment, over 9% down. So we've got a couple of updates for CleanSpark and Bitdeer, which we'll get into, but I'm not seeing how those would have affected the share price in a downward trend today.
Yeah, it definitely seems like an oversized correction. We've seen countless reports talking about institutional ownership in these miners continuing to climb, Anthony. The underlying fundamentals for Bitcoin looking stronger and stronger. We've talked about the fact there's hardly been any negative press releases or news on Bitcoin at its core in the last 18 months, but you're right, the miners continue to trend down. Now, we've got a story in terms of Soluna, CleanSpark. We'll talk about Bitdeer in a second here, but the big headline today, and a lot of influencers in the crypto Twitter space, talking about the announcement from CleanSpark. So kind of a double header here. They've opened up a $200 million Bitcoin-backed credit facility with Coinbase. Interestingly enough, we just got off a call or a video interview with Luxor talking about leveraging these large HODLs, putting that Bitcoin to work. So it appears that they're doing that to help fund some of their growth. Also giving an update on their ATM approach and strategy here in terms of raising capital moving forward. So a double header, Anthony. Maybe we can walk through your interpretation and then we'll take to crypto Twitter here.
As I say, CleanSpark, highlighted their strategy since, the middle of 2023. They've been really hodling everything each month, bar, a small amount of Bitcoin that's sold to cover the remuneration from some of the directors. Now, they use the ATM process really effectively during the last couple of years, and they've grown from, it was single digits exahash at the beginning of 2023 to where they are today at 42 exahash. So they've used that process there. But at the last earnings update, Zach indicated then that they're not going to use the ATM anymore until the share price gets to a level above $20. So the share price today is around about $7, so there's a significant gap to get to that position. So when you've removed one of the levers available for you, there's not many other levers left. Now, the one thing they do have is they have a ton of Bitcoin. They've got over 12,000, as they indicated today. And, that's worth, even at today's price, it's worth $1 billion. Now, they've said they're going to start, selling some Bitcoin, which, a lot of miners do to cover their operational requirements and also cover their growth. The other area they've got is, they could look to the debt markets. Miners fell foul of that in 2021, 2022 when they leveraged, too high in a climate where the Bitcoin price started to drop, and mining rigs that were sort of collateralized against loans also started to lose their value, and it caused a real problem in the space for a number of miners who had this type of debt. CleanSpark were very fortunate; they were using the ATM at the time, but now that they're not going to use that in the near future. Is going back into the debt markets an option for them? Probably not. They've got a convertible note already in issue, which they've utilized a few months ago. And now they're looking at other areas. So obviously the strategy with Coinbase is 200 million credit facility. That gives them opportunity to utilize that, and also the fact they've got $1 billion dollars in Bitcoin that they can also utilize, and they're mining significant amount every day anyway. They're mining getting close to 25 Bitcoin on a daily basis, so they're bringing in quite a lot of revenue, and they're growing to 50 exahash by the middle of the year. So this just goes to show that during these periods where uncertainty of Bitcoin price, miners have to sort of start making choices. I mean, CleanSpark have been sort of flying the flag as a big hodler, and they've grown that hodl, really well to now. But there's got to be a question mark as to start selling now when they could have been selling when the Bitcoin price was over 100,000 back in December and January. So. It's a game that miners play. Some of them fell foul of it in 2021, didn't sell, and ended up selling at the lowest level, and then realizing they didn't have enough even when they were selling to pay off the debt. And some went into Chapter 11, some were on the verge of Chapter 11. So it's challenging time. But CleanSpark tend to run a fairly tight ship, and we'll see how this plays out in the next few months.
Yeah, we certainly will. The timing is interesting. CleanSpark has shown pretty good intuition in the past through their machine purchases, through their Bitcoin HODL accumulation at timing the market. But it does bring up a good question, Anthony. Bitcoin has basically been over $85,000 since about November, or the past 6 months. They decided to HODL 100% through the 80s, the 90s, the low hundreds. Now shifting gears. This is a question I brought up earlier in the year about these pure play hodlers. Is what does this indicate to the market? Obviously, they now feel holding 100% Bitcoin doesn't offer the best benefit. So what does that tell, or what kind of precursor does that give to Bitcoin price, hash price over the next few quarters? Time will tell. But again, we've talked about on the channel, generally somewhere in the middle is probably the right solution between funding operations, pure play HODL, and that's ultimately where we've seen a lot of the miners shake out here.
You've got to pay the bills. They're mining at 42 exahash. They're using a ton of energy. They haven't got the cheapest energy, so they've got to pay for this. They've got to pay. Staff costs as well, and all those operating costs that come out in their earnings report. They've got to make all those payments too. So they've managed to up to now by using the ATM to pay for that. Now they've stopped using the ATM. They've got to look at other ways to generate cash. And so selling Bitcoin is the obvious one. If you're mining Bitcoin on a daily basis, as Dan Roberts would say, you've got to sell Bitcoin to keep, maintain your operations. And, there's a few miners out there that have just continued to sell all the way through this sort of like what I'd say is the start of a bull cycle. Haven't really, got to the levels people are expecting to. But now that we're seeing, a company now making a decision to start selling at this point in time and not maybe, if they think the Bitcoin price is going to get to 200,000 or 250,000 at the end of the year. But, from my perspective, they should have been selling before now and maybe not had as much leverage on other types of levers that they've utilized.
Now, a lot of people in the community, Anthony, responding to this message from CleanSpark today. So Rex Finance, Ben Briggs, a big advocate for the company, welcoming what he calls a new era at CleanSpark, stating this is exactly where he thought the company would end up. Quoting from the press release, this represents a meaningful strategic distinction from many of our peers who continue to rely on equity dilution to fund operating costs or increase leverage to grow their Bitcoin reserves. We view our approach as deliberately strategic rather than ideological. So we've seen a number of companies go towards this strategy, Anthony, some sort of a hybrid approach here. And like you say, ultimately you have to pay the bills and there's only so many levers available. We've talked about convertible notes maybe drying up in the market, the appetite for ATM and dilution definitely drying up. Our good friend Sebastian also comes out as a shareholder of CleanSpark. I have to say I like this approach. They're going to be selling a portion of Bitcoin mined each month to fund operations. I wouldn't necessarily call this a new era, more so a revision towards kind of the norm here in the sector for the Bitcoin miners.
Yeah, absolutely. And, if you look at miners that have been doing this, a really good example is probably DMG Blockchain. They haven't gone down the big debt routes or been selling lots of shares over the past 3 or 4 years. They're not operating at 40 exahash either, but they've been growing hash rate and they're going to be growing again this month. But they sort of manage their bills. They sell a bit of Bitcoin every month. They add to their HODL. They've got a really good HODL value. Yesterday we had it on the last podcast. Their HODL value was 39 million and their actual market capitalization was only 33 million. So there was a 6 million gap between what they had. If you start breaking up the company and just selling the HODL, you've still got the company left with all its infrastructure, all its miners, and there's just no market capitalization for those assets. So that's an interesting one. That's a good example of a company that does on a sort of like on a regular basis. And there are other companies that also sell or have been selling. I mean, IREN is the other extreme where they sell on a daily basis to help reduce having to go to other levers. So they do sell their Bitcoin mined on a more regular basis, maybe on a daily or a very regular basis throughout the month because they don't hodl whatsoever. And we've had it done on the show, and he's an advocate of that strategy. And it'd be interesting to see over time who's actually done well. I mean, we know that CleanSpark sold in the last bear cycle. The last bull cycle when the price was going up, they were selling and they were making good use of that. When a lot of miners didn't sell and then were left selling when the Bitcoin price dropped to its lowest mark. So they got the strategy right in the last cycle. Have they got the strategy right for this cycle? Time will tell.
Most definitely. And overall, do agree with the move here. And like we say, usually somewhere in the middle is the sweet spot here. So another nice update today from Soluna Holdings. I feel like they've had one nearly every day for the last few weeks, Anthony. They were the only miner in green on the board today. So the market starting to pick up attention here. But again, this share price, if you look at performance over the last quarter, definitely taking a beating.
Yeah, the share price is down considerably since the start of the year. We've seen a bit of a revival in the last 5 or 6 days. It's up over 20%, but it has dropped, something like 70% in the start of the year. Probably higher than the majority of the miners. And we're sort of like looking at that drop and trying to work out why, because they've had so many positive updates out. Today's just another update. They've got so many of these they used to be like smaller projects, but these aren't really small projects. I mean, they've today they've just announced they've signed land agreements for 166 megawatt Project Catty. Now they've been discussing Project Catty for quite a while now, and they do things in a very measured way. So they look at all these projects, and they'll start putting together the power elements of the projects, make sure they've got that in place then, and then they've got for the land. Look for the obviously they need a partner who can sort of like help with the capital provision for these projects, because when you look at the market capitalization of Soluna, it's not at a level where they can really achieve financing. They have managed to get a $5 million loan through Galaxy at the moment, which is there to use as and when they require it. But these projects require significantly more funding than that. This is 166 megawatts. So today they've announced that they signed the definitive agreements to secure 2 parcels of land required to build Project Catty in Texas. Remember, Project Catty is 2 elements. There's 2 83 megawatt parts to it, and that's 2 phases. One is going to unlock more Bitcoin hosting, and the second one is looking really for joint venture opportunities across the the high performance computing landscape. So 2 distinct business areas there. Remember, this isn't to be confused with the type of on-demand service that they were using with Project Ada. This is, this is more along the lines of, say, on a small scale to what Core Scientific are doing, or if you're looking at a similar scale, maybe on a scale of what TeraWulf are doing at their Lake Mariner site there. And now they've signed these agreements for these land parcels. They're going to move forward and look at the 3 key areas of the project of construction in 2025. One is now the capital formation. So they'll look to seek bids from prospective investors and customers for the hosting data center there. And with regards to HPC analysis, they've already had expert advisors complete the evaluation for the site for Tier 3, confirming its suitability for HPC and AI data centers, including the environmental, energy, and connectivity factors. So all in all, another, a good part of the Project Catty update today. And, bringing this additional 83 megawatts online brings their overall operating capacity to over 206 megawatts. And when you look at, that from a miner, that's, market capitalization is literally, $7 million. You need to look a bit further as to, what are people missing here? There's, John's been on the podcast, many times since he took over as CEO just over 12 months ago. And it's always a positive update. And he was really positive on the last update there. And he put retail investors' minds at ease with regards to the HPE contract and the impact that wouldn't have to the main company. So hopefully that's helped settle the market a little bit. And as we say, we've seen of the last 5 days, probably Soluna is the standout performer in terms of mining stock. I think it's the highest up over the last 5 days. And in the green today, when you see a lot of the big miners down 7, 8, 9%.
Compass Mining makes Bitcoin mining accessible to everyone. Start mining in as little as 48 hours with our turnkey hardware, online and mining directly to your Bitcoin wallet within 2 business days. Find out more at compassmining.io and get started now. Most definitely is, and one of your top picks in Miner Madness 3.0, which we'll come on to at the tail end of the conversation. Before we do though, Anthony, I mentioned we had Luxor on today, Matt Williams, the head of derivatives, talking all about forward hash rate, hedging, derivative strategies, very informative. So I'd encourage you guys to go take a look, specifically as it relates to leveraging these large HODLs that the miners have accumulated. Now, speaking of interviews, we've also got one coming up tomorrow with Logistics Plus, talking about miner supply chains, tariffs, import restrictions, basically anything to do with transporting, warehousing, storing miners, and getting them to site. This was specifically interesting because we talk a lot about tariffs on the channel. We've seen Trump's exemption list from those tariffs. Bitdeer, a great example of what true vertical integration allows, today coming out with an article stating to avoid any of these tariff challenges, they're just going to put the seal miners into their own facilities outside of the United States. So I thought this was interesting, Anthony, very timely with Logistics Plus coming on the channel to talk about this, and then Bitdeer showing one of their advantages or strategies here with that vertical integration.
Yeah, no, it's a really good update from Bitdeer, and there's been a lot of talk about tariffs and the impact of that, and whether or not does some of the exemptions from tariffs. So we believe that maybe some of the chips are exempt. Doesn't necessarily mean the whole machine's exempt, but some of the chips that I think we've had a discussion on Spaces yesterday with Wolf Crypto, and there was a suggestion from some people on there that going down the list of exemptions, chips we're including that list as exempt any tariffs, so that might help some of the miners. But Bitdeer operate in so many sites outside of the US that they have a fallback position, and if you look at what's coming online over the next few months, they've got the 70 megawatts in Norway, the tidal site there. That's energizing next month, or by the end of April 2025. They just energized 100 megawatts at the Rockdale facility, where they're introducing the hydro mining rigs there. Bhutan is due to energize in the second quarter of 2025. So in the next 3 or 4 months, there's a massive site. That's a 500 megawatt site. Clarington in Ohio, that's 266 megawatts. Phase one is due to be energized in Q3 2025. And this new facility in Ethiopia, which we talked about last week on the podcast, 50 megawatts, is set to be launched by Q4 2025. So in my quick calculations there's over 600 megawatts of power coming online in the next few months. And a great majority of that is coming online outside the US. So, they've got more power on than they can probably produce machines for. So this is going to be interesting to see. They have got a fallback position. They can use those machines in some of these other countries and avoid any tariffs. And then when the tariff situation gets sorted out, they can then start, maybe selling more miners to customers who inevitably, maybe some of their peer miners, some of the big non-public miners. I mean, remember, the Seal Miner A2 is already producing 14.9 joules a terahash, which is up there with the most efficient miners on the market. And they've already tested the Seal Miner A3, which is delivering less than 10 joules a terahash, and they have an ambition to achieve with their Seal Miner A4. They're going to be achieving somewhere about 5 joules if they can get that to where it needs to be by the end of the year. And they've achieved everything they've set up to now. So that team at Bitdeer, look likely to, certainly be giving all the big developers out there, big suppliers of mining machines like the Bitmains, like the Micro BTs, like the Canards, a nice run for the money during 2025.
Yeah, they certainly do. And we're going to be putting one of those seal miners to the test, pairing up with Compass to host our own seal rig, Anthony, and see how that works. Now, keep that pipeline under development comment you made about Bitdeer in mind here, you guys. We're going to move over to another great visual from Matthew Siegel. Funny, it says a recovering CFA on his account here, Anthony. He was on the panel with us in Fort Lauderdale, one of the most well-respected Wall Street analysts in the space. He came out with an excerpt here from Morgan Stanley stating, "We would also like to highlight many Bitcoin stocks trade at an implied enterprise value to watt of power access below $1 per watt, as we have witnessed several Bitcoin to data center repurposing transactions with a present value, in our view, above $5 per watt." So if you take a look at this chart, essentially what it's saying in blue is the entire pipeline or portfolio these companies have. In yellow is what they currently have under operations or are in the process of building. So in the case of Bitdeer here, you can see if you're looking at the yellow line, which is currently operating and under construction, maybe in the neighborhood of around 70 cents per watt. If you look at their entire portfolio, which as you alluded to, is very close to coming online. Slightly lower valuation, maybe in the 60 cent per watt range. But as you look across this entire table, Anthony, at many of the top miners we cover, whether you're looking at currently operating, under construction, or the whole portfolio, nowhere even close to that $5 per watt benchmark that Morgan Stanley has recently seen.
Yeah, I mean, if you looked at the one that the highest value at the moment, Core Scientific, but remember, Core Scientific is something that all these miners haven't got. They've got a sizable contract with CoreWeave. I mean, $10 billion contract. That's got to have been built in a little bit, so, into their share price. So even with that size of contract, they're still less than halfway in terms of present value from what the norm is, if we're led to believe what Morgan Stanley is suggesting, $5 per watt.
Yeah, very interesting and a great case to be made here for value or the valuations of the mining sector. Now, I mentioned earlier Miner Madness 3.0. You selected Soluna as one of your top picks, Anthony. So already off to the races here. We might have to kick you out of the next competition. But you're in first place on the analyst board. I'm in third right now. Freedom by 40. Right in the middle of us in second place. We also have a top 20 up on our website here. You can go in, you can search your name, see how the analysts and the regular entries are placing. But compared to Miner Madness 2.0, off to a great start.
Yeah, and actually, if you look at the leaderboard at the moment, I think anybody that's got Soluna in their three picks are certainly in that top 30. So I think Soluna was picked 14 or 15 times. We talked about it yesterday going down the minors, nowhere near the amount of times that IREN was selected, which was well into the 80s. But I think a few people probably took heed of what I said in the last competition, where I said, don't think of this as your long-term picks. If this was long-term picks, I'm not sure I would have picked the same three miners. If I look at my portfolio, there are three different companies, albeit IREN is in my top three picks in terms of shares that I hold. But the other two aren't in my top three, and it was really judged on what's happened in the first 3 months. What are we hearing at the moment? Because at the end of the day, we speak to these CEOs and we give you the videos to listen to as well. So a lot of the time we'll ask your questions. And maybe some of these CEOs put a little bit more color onto the responses. They're not out there trying to give us that. We're not asking for secret information. What's the next big deal coming along like that? We know we're not going to get any information like that. The SEC wouldn't allow it. But what we do ask sometimes is just to get an understanding of how they've got to this part, what's driving them, what are they seeing in the market at the moment. So just more generic questions that maybe gives a better understanding to the retail investors. And we even know that some of the Wall Street guys also watch the podcast. So a big shout out to them as well. I met a few last week in London, and they were also saying they've been watching some of the podcasts. So it's great to see that. And as the competition goes, it's early days. It's day two. I'm not trying to lose sleep, but Soluna was an inspired pick because of the fact that John comes on the podcast. He's very positive. The share price isn't acting the same way, and I felt having that share price, it reached, I think it was like $8 last year, and it's down at sort of 60 cents. There's a long way to get to in terms of get back to where its highs were in 2024. And things can happen quite quickly in this space over a short period of time. So that was why I selected Soluna. In the same way I selected Bitfarms. We had Ben Gagnon on the podcast again. Was it literally just a week ago? He was very upbeat. I mean, that company have just nailed 3 deals in the past month, and nobody's really talking about it. They've sold their site in Paraguay to Hive Digital. They've moved away that business now. They're looking more so on the US markets. The second deal, they've just completed the purchase of Stronghold Mining. So that's the largest public miner acquisition of another public miner that the market's seen. And what we're hearing now again from analysts in the market is that Panther Creek, is one of those sites that Stronghold had. is looking seriously good for high performance computing. So that's the direction that Bitfarms moving in. Again, is good. And also the fact that they landed the Macquarie deal. So that's another 300 million of support, of which 50 million is initially given them to cover normal expenses. But should they land a big client, then there is access to a further 250 million to support a HPC deal going forward. So again, really, really positive. And that was why I did my selections there. But as I say, it's day two. Got nearly 2.5 months to go before the end of the competition. I'm not counting any eggs before they've hatched.
No, some good commentary there, Anthony, specifically on the Bitfarms situation. That was a great interview with Ben, and would encourage you guys to watch that for some nuggets as well. But let us know in the comment section below, you guys, what is your interpretation of the miners today pulling away from the Bitcoin decline so dramatically? Bitcoin continuing to trade down, miners continuing to give up ground here. We'd love to hear your thoughts. Make sure you check out the video from Luxor. Again, some great information on future hash rate and derivatives, and we'll see you back here tomorrow.